I'm Jared Nelson from the Investing Channel, and welcome to The Spill. The global data storage market is expected to grow at a compound annual rate of 26% between 2022 and 2027. And Western Digital sits front and center of this trend. As one of the largest hard disk drive producers in the US, the company services consumer, commercial, and cloud clients. Although it's only the fifth most searched computer hardware stock by financial pros in January, we believe markets are sorely underpricing the company's potential. You see, back in 2019, the company saw revenues nosedive from $20.6 billion to $16.6 billion due to a supply glut in the market. But those days are over, as constraints on the system have created a multi-year backlog, allowing the company to achieve pricing power and improved profitability. With improved cash flow and substantial growth potential, we see a lot of upside for this company. Looking at the financials, Western Digital faced steep declines in revenues and profits due to a glut in the memory market in 2018, which sent shares of the company plunging more than 50% over the following year. As COVID curtailed production, the imbalance flipped the other way, helping Western Digital and other memory manufacturers to improve margins over the last year. In fact, gross margins are nearing their peak hit in 2018, with flash memory nearly there. We expect flash to grow alongside mobile devices and the Internet of Things in the coming years. HDD should continue to see steady growth as more companies lean on cloud computing for what's becoming an increasingly remote workforce. One concern many analysts point to is the heavy debt load the company carries, which is coming due quite soon. Across all the valuation metrics for Western Digital relative to the technology sector, the company appears incredibly cheap. With forward price-to-earnings ratios below 10x, a forward price-to-cash flow ratio of 6x, and a price-to-sales ratio of 1.06x, this stock is a bargain. In fact, compared to its own 5-year average, Western Digital is trading at a discount with few exceptions, such as price-to-sales. And even then, it's just barely worse than the average. In our opinion, this is a 9 out of 10 stock, and there's a lot of reasons to love Western Digital. And if we can get the stock back down at $50, we'd consider it a steal. Click and subscribe to the Spill newsletter to get the full breakdown.